Hi traders, and welcome to my video on the ADX Breakout trading strategy. This is a simple trading strategy that you can use to help you catch big market moves such as this one for over 400 pips and this one for over 350 pips. It's a very simple strategy. It can be used on any currency pair or other trading instruments such as cryptos, stocks, commodities, indices, etc. You can use it on any time frame. This is the 1 hour GU pound dollar chart. I personally prefer to trade the 1 hour chart time frame and above simply because it contains more price data and therefore signals tend to be more reliable from my experience. It also means less time chart watching, which is great. That being said, let's get into the strategy. So this is a breakout strategy. So the first thing you want to do is to mark support and resistance on your chart. So I'm going to do that here. You can see we have this resistance level. It's very strong. It's been tested 1, 2, 3, arguably 4 times. This is a triple top candlestick pattern here. I do have a video on the triple top pattern, but basically means that a resistance level has been tested at least 3 times, as we can see this has. Okay. We can always draw the support within this triple top. It's known as the neckline, so that'll be here somewhere. And once we've had the third top there, we can wait for breakout below. Okay. We also can draw our trend line. We see that the market is making lower highs here. So following on from the price rejecting this resistance level here, 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 and here, we're going to wait for the market to stop falling as it does. And then this is where the ADX indicator here is going to come into play. I'm using the MT4 platform, MetaTrader 4, where the ADX, or the average directional movement index indicator, is already included free of charge. It's probably available on your charting platform as well if you're not using MetaTrader. It is quite a popular and common indicator, so you just need to add it to your chart. I'm using the default period of 14 here. And basically the way the ADX works is when the red line is above the green line, we are in a bearish market, and when the green line is above the red line, we are in a bullish market. It's not accurate 100% of the time, but it can do a good job of helping to filter for which direction we're going to look for trades, and also to help us decide if we want to take an entry or an exit based on any other market analysis we will be using. I've added this 20 level here to the ADX. And this is because this main line here, you can see this one is the momentum. I generally say if that is above the 20 level, then there is some momentum, especially if there's divergence to the upside. A trend is gathering momentum. And if the line is below 20, I suggest that perhaps there's not much momentum in the market and we may be in approaching a range, and we want to avoid trading trend-based strategy. As you can see here, this main line is below 20 there, and the market is sort of stuck in this range here. Okay, whereas when price jumps up here, there's momentum, so the main line is high. You don't have to use the 20 level. It's just from my experience, I find it to be any 20, 25, even 30 at a push, a level for gauging momentum. This can be a good tool if you want to trade, if you actually want to trade range bound markets, because you can just wait for the ADX to be below 20. As it is here, or it's approaching 20. You can see that we have some divergence there. That is, the momentum is slowing down. We're in this range, and then you could be looking to trade the range here. But for the purpose of this video, we're focusing on trend trading because we're catching breakouts. Okay, so that's the ADX indicator in a nutshell. Very simple strategy. Once you know how that works, you just look for a breakout of the support level, and what we're going to look for is the red line to be above the green line, and this ideally to be above 20. As I said, it's not set in stone, but and sometimes it won't actually go above 20 until the move has the trend has started to form. As you can see here, it goes up once the price has already begun falling. We know that it actually began falling around here just from our trend line and looking at the charts. So mark your resistance, mark your support, and enter on a breakout with the ADX, the red ADX above the green for a sell trade. And as you can see, this would have been a good breakout trade here. Had we entered on this breakout, if we zoom right out, if we would have entered on this breakout here, we could have been in the market now for over 350 pips. Okay. If we didn't get this initial entry, there's no harm in waiting first for price to break out, just because there will be instances where there'll be a fake out and the price, won't fall down as it did here. It would just continue up in this direction, perhaps range or start heading in the other direction. That's why it's important to have a tight stop loss. I like to cut my losing trades short and let my winning trades run. An example of that would be once we enter here, my stop loss would initially probably be just above this high or the other side of the support breakout. So you're looking around 10 to 20 pips, which is very tight for the 1 hour time frame, especially when you consider how far price has actually gone from here. Really good risk to reward ratio on this trade. And as price fell, first of all, I'd look to lock in the stop loss at break even. I'd wait for the pullback, and then when I see price falling again here, I would have moved my stop loss above this high. Again, pull back here, price drops, stop loss above the high. Pull back here, price drops, stop loss above the high. Okay, we have this probably, arguably would have waited for this pullback, and as price fell there, put it here. This pullback, price fell, put it here. We may have been stopped out around this area here, unless we saw this consolidation here, this range in market, and just we were taking profit. Anyway, you can also close part of the position on the way down, so you don't necessarily have to wait for just leave your whole position open until it all gets closed. You can take part profit here, part profit there. It just depends on your own money management. What I wouldn't want to do is panic around here and be like, wow, say you have a fixed 3-to-1 risk to reward ratio, and you see the trade go, you have a 20 pip stop loss, the trade goes here 60 pips, and you get excited and exit the trade. I mean, you've left a lot on the table, which is why I don't personally like to use fixed levels for take profit and stop loss. I like to look at the market and see what it's telling me. That being said, if you did get taken out here, going back to what I was saying about waiting for the trend to form, what you can do with this ADX breakout strategy is you can wait for the trade to form and then for a pullback. So when I say that, I mean we have the trade formed, the trend, has formed. By the time price comes down to here, it's clearer than it was maybe up here for some, and then we're going to wait for a pullback. Okay. So then when you have the pullback, now we're thinking we're going to look to get in on this trend. How are we going to time our entry? So you could just use this support level here and again trade the breakout, which is a good strategy in itself, or you could use the ADX breakout strategy. So what we're going to do in this instance is we are going to wait for the ADX red line to go on the other side of the green, which is the pullback area here. And then we're going to wait for the red to cross back up above the green, which suggests that the trend is continuing, which would have been around here. Okay, you can see the red crossed the green. So you could have entered the ADX breakout there. That would have been on this candle. If we just zoom in, where is that? So crossover here. Okay, well, you have a tweezer top candlestick pattern there as well. So perhaps on the breakout of the low of this candle here. Then this is a level of resistance that forms. So really anywhere around here, once you see that the red has gone above the green, you can also wait again for the main line to be above 20 for the momentum of the trend and just enter anywhere in here, or wait for the breakout. Keep an eye out for your candlestick patterns. I do have lots of videos on the various different candlestick patterns. It's just really useful to be aware of them because they can confirm entry points. For example, here we have a three inside down pattern where I have a bull candle followed by a bear candle. That's at least 50% the body of the bull candle, and then a third candle which goes below, so that could have been below the first candle, so that could have been entry point. I mean, obviously don't forget your basics, trend lines, that's pretty basic things that you should be doing, which has actually formed a wedge pattern based off this support level here. So again, further confirmation for this trade. We have a falling star candlestick pattern, a hammer. All the signs are there for the short trend to continue. I could just tell you use the ADX and blindly take the crossover as your entry. But I think it's important to be aware of, other price action formations and candlestick patterns. If you can have extra filters for your trade without relying necessarily on lagging indicators all the time, then why not? Just make sure, as always, you've got good money management. Like I said, trail. If you did enter here, again, you could wait for the pullback. Initial stop loss would be just above this level here if you entered on the breakout. The previous high, and then you could just quickly move it to entry point. As we have the pullback and then the next drop, we could move our stop loss down, as I said, above the highs, just following price down, perhaps exiting some of the position where we see this range in market here. As I said, the ADX can be good for range trading. This is a range here. The ADX is, the momentum is low. You got the equal highs there, some equal lows. All this spaghetti here, this mess. So you could perhaps use the stochastics to, try and pick the lows and pick the tops. But I prefer to focus on trend trading. As they say, the trend is your friend. So that's an example of how to trade the ADX breakout. You want to get in and ideally at the start, you want to sell high. You don't really want to be looking to sell down here somewhere. So you had the initial opportunity around this area, then this opportunity here. And perhaps the ADX, so we have the ADX cross back over there to the upside, and then it did cross down here. See the red crossing back above the green, which could have been another entry just to get in on this trend, even if you are a bit late to the party, because we can see that we do have a level. This was a level of resistance. It was breached. Price fell back below. That looks like a Friday NFP candle, non-farms payroll day, first Friday of the month. And then price came back up, tested this level again, which held up well. Keeping in mind this is a 1 hour chart, so the support and resistance can be more reliable in my opinion. If you honed into the 5-minute or 50-minute chart, you probably see that level's been touched a lot more often. And then the ADX crossover, still some momentum in the move, could be considered a sell trade there if you just wanted to get in on the last run. And saying that, there still would have been a good 50 odd pips, if you could have braved it out till here and handled this pullback, still over 100 pips in that particular move. Okay, well, hopefully I've made it clear enough how to use the ADX breakout strategy in a downtrend. Now let's take a look at an uptrend. Okay, this is a nice uptrend we have here. As I said, what do? You mark your support and you mark your resistance. There you go, support and resistance. And then we're going to look for the breakout. The breakout is here. What is the ADX telling us? Fantastic. The green is above the red. We've got nice momentum to the upside. Let's take the breakout trade. Okay, some traders may argue that we could have looked at the crossover back here and traded the breakout around this level, because this is still decent level of resistance. You know, we do have, could even say that there was support here in the shorter term. So it just really depends on how much time you have if you want to look at the short, medium or long term. Either way, you can get good entries with the ADX and timing trades on the breakout. As we go along, breakout of resistance. So we trade on the breakout here. We can place the stop loss below the recent low. You're looking at around 20 pips. Then you can quickly move the stop loss to break even as price starts creeping up here. Lock in the trade. Don't let winners turn into losers. And yeah, the ADX just basically shows you what the chart is showing you. I mean, you can draw a trend line, will tell you the same thing. There's a wedge pattern there as well. Consolidation here before the breakout. You also have this bullish candle here engulfing the previous bearish candles. Another good bullish signal of these three white soldiers pattern. So that could be considered. Three white soldiers, basically at least three bullish candles and a pullback, and then you use the top of the three bullish candles as the breakout point. So that would have been a textbook three white soldiers trade there. So the ADX breakouts happened. You're loving life. You've timed it perfectly, and then you can just move your stop loss. What did I say before? Wait for the pullback continuation, stop loss below the low. Wait for the pullback continuation, stop loss below the low. So trade hasn't really gone. Could maybe argue that you'd put it here. Trend pullback below the low. What? I don't think price has moved enough from that area, but as it comes up here, you certainly would want to go below the low there. And we probably would be looking to exit once we see all of this playing out up here. If we didn't exit here, the ADX is, you know, the red crosses above the green, downwards momentum. So perhaps we would have been looking to exit here. Certainly we would have been gone before price pulled back this far. You can always close, as I said, part of your positions on the way up. You know, if you want to take 20%, 50% of your trade and leave the rest to run with more profit locked in, it's just up to you. It depends on your own money management preferences. Okay, again, you can wait for the trend to form before jumping in. So if you don't want to jump in here, you can wait for the first pullback and then just adjust your support and resistance levels accordingly. So you would want the crossover there as it goes to the upside. So you have your pullback here. Price comes back up to the resistance and you look to trade on the breakout. That resistance then becomes support. So this could have been a potential entry point. The ADX as well is moving upwards. The green is above the red. And this support level actually holds up over here, which emphasizes its strength is touched there as well. And if we move on, okay, possibly this area was reacting. But yeah, so you can also look to enter on the ADX breakout after the trend is formed. Okay, green above red, momentum. Same there. If we just hone in on that. Got the green above red, momentum. Perhaps you'd want to wait for that to turn to the upside and then just enter there. There's still plenty of opportunity left in this move. Again, here, green crossing the red, divergence to the upside, momentum is increasing. Could have been a good entry point there. You also have another resistance level there if you just want to wait for the breakout. Okay, wait for the breakout and confirm with the ADX. Upwards momentum, green above red. That's a nice trade. Okay, so going back to this example, this wasn't actually a breakout of resistance. But this is a strategy really when you would be looking to use resistance. You don't always have to. However, as you can see from this this one here, it probably would have been a better entry than trading in this mess here. Okay, we had the upwards divergence on the momentum, crossover to the upside, and plenty of gas left in the tank to catch the last little run of that move there. Wow, it's just a basic strategy. ADX breakout of support and resistance. Make sure you use sensible money management, and as I said, I like to confirm my trades with price action patterns, candlestick patterns, etc. And again, higher time frames tend to give more reliable signals in my experience. Okay, please like and subscribe if you found this video useful. Thanks for watching, and I hope to catch you on the next one.